Welcome, everybody, to this Eshbal Functional Food webinar. It's an introduction to the company. I'm Grant Howard, president of the Howard Group, and today I'm joined from Israel by Tomer Bar-Meir, who's the CEO, Yuval Levy, who's the chairman of the board, and Avi Markus, who's the chief commercial officer for North America. The company, we'll call it emerging in the public arena, just started trading as of this past April, so relatively new to the public market, and relatively unknown to the broad investing public. So this is the start of a series of things that we're going to be doing. And in terms of, is this a new company? Well, it's new to the Canadian market, but certainly not new as it relates to its operations in Israel. It's been running for many, many years, and this isn't a company that's on the hope and the whim of future revenues. They reported 10.1 million US in the first 9 months of this year. Operating margins were up, positive EBITDA. It's all good and interesting. The current market capitalization of Eshbal is about 12 million Canadian, or around 9 million US. So the 9 month revenues and everything were positive. It's actually greater than the company's current market capitalization. So again, this is the start of a series of things to make the broad investing public much more aware of Eshbal and its planned expansion into North America and its focus on the gluten-free sector, of which many people are affected, including people in this office who have tried the product and they gave it the 2 thumbs up. So with that, Tomer, I am going to pass it over to you, and with the participation of Yuval and Avi, get people to understand all the positives about Eshbal.
Perfect. Thank you very much, Grant. Hello, everyone. As Grant said, my name is Tomer. I joined Ishbal about 10 years ago through a successful M&A we did here in Israel back in 2016. Ever since, they were stuck with me. I started as the VP of Marketing, continued to CEO of Eshbal Israel for about 6 years. And today I'm the CEO of the public company, introducing both Eshbal in Israel and the North American expansion. I would like to start by thanking you all for freeing some time in your, I assume, busy calendar to hear us and learn a little bit about us. So I'll just get going. Eshbal is a food tech company specializing in better for you products. We do everything from development, production, and sale of the goods. We have a 60,000 square feet facility, over 70 employees. We have our own in-house lab with 4 food engineers doing all the development of new products and continuing the making the current products even better. We aim to control everything from grain to finished goods in order to have the right quality of each product that we launch. And as Grant said, starting April this year, we became publicly traded on the TSX Venture Exchange under the symbol ESBL. Among our better for you products that we produce, as you can see, we have a few. Gluten-free product is one of our biggest segments. We do starting from different gluten-free flour mixes and all the way to finished goods that we produce in our own bakery. Products start from breads, rolls, baguettes, ciabattas, pitas, cakes, cookies, pizzas, breadcrumbs, and others. We are very conscious to the ingredients that we add to the products because we would like them to be as healthy as possible. We also have a dietary supplement and nutraceutical department doing different tailor-made supplements, protein-enhanced products, and snack bars. Also, other specialty foods such as enriched foods for seniors, athletes, sugar-free options, vegan alternatives, low-carb products, and more. Eshbal's facility operates under many different kinds of food standards, such as ISO, ASAP, and GMP. And over the past 2 decades, we've gained a lot of know-how. Since in Israel, we are already a leading producer, but doing better for you products, which is a niche segment within a niche country in Israel, we've decided recently that we would like to expand our market also into North America. We've learned of a lot of similarities and also about some opportunities. Joining us, as Grant said, is Avi, which is our local North American boots on the ground guy, acting as our Chief Commercial Officer. And Avi, if you may.
Yeah, thank you, Tomer. And it's nice to be here. Nice to meet all of you guys remotely. Um, I am the chief commercial officer for the North American side of the business, and I have to tell you, I've been with the business now for about a year, when since we started this exercise, and I have to tell you that what really drew me to this discussion was the gluten-free market itself. I have an intimate relationship with it. I've got family members that are in it both for the celiac purposes as well as just because they believe is a better solution. And I know that we're poised for a great exercise here. So let's start by looking at the North American market. It really is. It's the most significant market on the globe, representing about 40%, and it's really fueled by the fact that in North America you have consumers and trending in this direction that they just clearly are looking for better solutions, whether it's gluten free, whether it's allergen free of something, whether it's organic, non-GMO. They are looking for better solutions, and there's no question that the retailers are taking action. If you look across the multiple markets, grocery, drug, mass, club as well, there's no question that it's having a major impact. And the fact that you're seeing these shelves expand, you're seeing the number of freezers expand, and it stands to reason that you have a better for you society that's heading in that direction. You've got this flexitarian mentality that you want to try different things, and different household members are looking for different things, and it's reflected in the grocery stores and the various different retailers. We're seeing superb growth. At the end of the day, the North American market right now sits at just over 3 billion, and it's going to grow compounded annually, probably about 10% over the next 5 years. And this is a good time to switch to the next slide, in the sense that, let's talk about Canada for a second. So that's my backyard. I'm from Toronto. And the Canadian market's actually quite interesting in that it's always had just a little bit more of a sophisticated shopper than the U.S. when it comes to better for you. We are kind of ahead of that curve. We shop in a different way. It's about a third of Canadians have already. I mean, that's a big number. That's 30. More than 33% are already basically identifying as a better for you shopper, and it's definitely, you're seeing that in the major grocers, like from Loblaws and Walmart down to Whole Foods, across which of course has a lot less doors than it has in the United States. What you're seeing is that the shelves are expanding and the freezer is expanding, and definitely bakery is playing a very key role when it comes to gluten free. I would ask all of you guys to take a quick look at the grocery store and go to the freezers. You'll be surprised on it's almost in a diluted effect, and there's new innovation constantly, and the retailers are taking action because of it. There's about $600 million already, part of that North American market, and as well looking to grow about 10% year over year on a compound annual until about 2033 and forward. So I'm really bullish about what we're seeing here. I think in the United States and Canada, across all multiple channels, it is exactly the right time for Eshbal to enter the market, and I'm happy to be leading that charge. Thank you, Tomer.
Thank you, Avi. For me, this is probably the most important slide outlining, in a nutshell, our North American expansion strategy and some of the milestones we've achieved so far. Our North American expansion strategy sets on two main pillars. The first is promoting organic growth, and the second will be, I'd say, even aggressive M&A strategy. Starting with the first, we've decided to go with a focused entry approach, meaning not trying to introduce 20, 30, or 40 different products and seeing what hits, but actually identifying the most value-added product that we can offer and focus on them. We found out that gluten-free baked goods is the way we want to go. And starting with our flagship gluten-free pita bread to start with. But of course, as I previously just showed, we have a very vast pipeline to add offerings once we grow. We've also decided that we want to make the supply chain as short as possible. Therefore, we are focused on local production of the product being produced as close as possible to the market we sell in. Um, we actually aim to have our first commercial production early Q1 of 2026 in about a month and a half or two. Another very important milestone was we recently announced signing with a US broker named Active Marketing Group. These guys will basically act as our sales force in the US, introducing us and the product to potential consumers and clients. Um, More retailers than others, and that's a very impressive milestone we just passed, and they have already started working. On the M&A side, sorry, we are seeking and talking to various companies, of course, within the Better For You segment. Acquiring these will create market reach and distribution. It will help Ishbal gain an existing footprint and market access, and hopefully shorten time to market. It will facilitate the first pillar, which is the organic growth, introducing Eshbal's products and know-how through these companies. Dare to be Different is a very good example for that. We also recently announced signing a definite agreement to acquire Dare to Be Different Foods. It's a New York-based brand with very complementary products to Eshbal's know-how. They produce various products based on broccoli and cauliflower, natural ingredients, gluten-free, low carb. So it fits our strategy very good. They are already selling in the tri-state area. And other than using Eshbal's know-how to maybe even make their products a little better, we can use their existing channels in order to introduce some new products from Eshbal. The M&A strategy is part of a roll-up strategy. Basically, is meant to add various small to medium different companies to create synergies, of course, backed with Eshbal's know-how. We actually aim to do one or two acquisitions annually. Alongside this, of course, we're also building our local team. You've just met Avi, which is the spearhead of that team, creating boots on the ground to navigate the North American expansion, starting with Avi and increasing once we scale. Some financials. Eshbal is a constantly growing and profitable company. As Grant said, we had a record-breaking Q3 results, doing $10.1 million in US dollars in revenues. More importantly, it's a 16% increase from the previous period of 2024. Another key thing is gross margin improving from 23% of revenues onto 27% out of revenues. And for the forecast on the right, as I said before, 25, we aim to finish at 14 million, but 26 and 27 revenues will be generated, of course, from the Israeli operation, existing one, the North American expansion, and of course, the added revenues of the acquired companies. This is our cap table. The most interesting thing I would like to show is that we have a relatively tight float, which means we have a strong insider ownership, meaning those who led Eshbal to where it is today are still promoting the company in the future. For management, well, you've met two of us, but more importantly is that we will continue growing the team alongside our success in the market, various people with various expertise to make the team work together to promote the company. Within the board of directors, accumulated decades of experience in production, in financing, in M&As, which I said how important it is to our strategy, and also Canadian capital market experience. That team will help us steer a newly traded company to success. And just to recap, what we had here, Eshbal is a profitable public company traded on the TSX Venture Exchange under the symbol ESBL. We're expanding our market to North America with our Better For You solutions. We'll have an aggressive M&A strategy to create a footprint and a market reach, while building, of course, our boots on the ground to help promote this expansion. And if anyone has any questions, I'll be happy to reply.
Thank you, Tomer. Avi. Now, to the folks who are in this webinar, if you have a question, please use the Q&A button at the bottom of your screen to submit those questions. We'll give you a moment to do that, but we have some questions already in. Tomer, maybe you can take the presentation off the screen momentarily, unless we have to refer to something, and then we can really see all of your beaming faces.
Good.
A few of these questions. So you talked about M&A in North America. I don't know how much more specific you can be. You talked about dare to be different, for instance, and I noticed in the presentation, as we've seen more than a few times, the mention of Walmart. Is there any chance, if you can refer to this, that you could see Eshbal products in the future in Walmart stores starting up in the tri-state area in the U.S.?
Definitely. This is exactly the opportunity we're trying to move forward to. When we, as Ishbal, no one knows us at this time, come to buyers at Walmart, as you said, and they don't know who we are, and getting in, getting reviewed, accepted, and coming in, it's a possibility, but it will probably take some time. If we come through the back door, going through, let's say, dare to be different as an example, then basically we can come in and say, listen, we are already a supplier of the chain. We already have 2, 3, 4, 5 different products working. How about you consider a fifth? It should be an easier access and higher chances of success. But we're looking not just at Walmart at the tri-state, and Walmart is just one, but the whole strategy of M&As is we're actually looking at two types of companies that we're seeking. We call the first one operational companies, and the second one we call brand companies. The first, of course, are quite easy, some kind of companies that have some footprint and physical footprint in the market. It could be a producer, it could be a distributor, a logistics company, to create a home base in the local market. But more importantly, is we're seeking, similar to Dare to Be Different, brand companies, companies that already reached the barrier of sales, and they already have clients, they already have a brand, they already have connections, infrastructure, and stuff like that. Basically, both of them will create, as I said before, the footprint and the market access. I think it's interesting to know, and I'll do like a vertical integration from both sides. Most Better For You companies are usually small, founder-led. They have limited resources and knowledge of the market. As I said before, we can launch the roll-up strategy, basically becoming the vehicle to carry them, and together we can share more resources, consolidate, and create efficiencies, and become better together. But on the other side, and that's the vertical integration. If you as an investor would like to come and join this lucrative segment, you're not able to. But because everyone is small and private, and you need to identify each and every one of them in order to participate if you can. But as Ishbal, a vehicle to add these companies onto us, that basically, because we are publicly traded, investors can come and join and be part of this very interesting segment.
Okay. Saw you nodding away as Tomer was talking about the expansion. Is there anything you'd like to add in terms of specific strategies?
Who are you talking to?
To Avi.
Yeah.
To us.
Yeah, I will say that we're actually when it well, I'll go back to the question about Walmart. I actually think we're in a very favorable position for Walmart for various reasons. First of all, so I've been involved with and shipping to Walmart for many, many years. And if there's one thing I really appreciate about Walmart is that they are a strong supporter of emerging brands. And I know that's almost most people, if you're not familiar with the categories, you'd question if that were the case, and that makes sense. It's Walmart; they're a large organization, if understatement of the year. But when it comes to emerging brands and emerging categories, they want to be in the front, and not every retailer wants that. I can think of many who actually prefer to wait 4 or 5 years until there's accumulated data. So I think that we are exactly the type of brand that can have a really strong conversation with Walmart. And I will add to that as well is that going back to active marketing, it is one of their sweet spots. They have a terrific team who is deeply entrenched in Walmart, and it's part of the reason we actually selected them. I'd say straight up is that part of the allure of them is their network, which is not to give you an example, the person who leads the active group lives in Bentonville, at Fayetteville, in Arkansas. This is not a relationship that is taken from their head office in Florida. She lives and eats and breathes the Walmart business. She's a former Walmarter herself. So I feel really confident, just if I were to address that one question about our prospects for Walmart, I think they're very strong.
Okay. Another question. Considering you've had, a large 60,000 square foot manufacturing facility in operation for a number of years now, the question was, why invest in local production in North America instead of just importing your products?
It's a good question and quite simple, actually. It's the short answer is execution, simplicity, and also pricing. When Avi comes to me with news, listen, I just landed Sprouts, HEB, or Walmart that we just talked about, and they want 20 pallets of goods. Once he gives me that call, until we can produce it in Israel, freeze it in the container, ship it all the way to New York, then land transfer, and then ship the product, it's easily 3 to 4 months. That's not good execution. We think a shorter line supply chain is smarter. It will save money and will be more efficient. And because we've been producing for so many years, production is our strong suit. We are very confident we can produce anywhere. So if we can teach anyone how to create our products, then why not do them as close as possible to the market you want to sell them in?
Well, as a food tech company, that's how it's being labeled. Can you talk a bit about, the technology side and what you've been able to develop in terms of shelf life, better taste, whatever it may be?
Sure. Traditional gluten-free products are basically known for almost non-existent shelf life. I'm happy to say that in Eshbal, with our experience, I've been in the gluten-free market for almost 20 years now. We've got our products as close as possible in terms of shelf life to regular breads. However, these products are usually sold frozen, and that kind of helps the time we have to sell the product and not create a lot of waste. But we have been working in Ishbal, and recently launched in Israel breads and rolls, gluten-free, of course, packed after special production, special packing techniques and packing materials that have a shelf life of 6 months at ambient temperature. This is something we've been working on in Israel for quite a while, and we think that once it matures, it could be really interesting also to the North American market.
The questions had to do with a shorter shelf life, notorious with the gluten-free products, and you've addressed that. But the other part of the question was, can you do that without, on an extended basis, without hurting your operating margins? And based on the 3 and the 9 month results, your margins have continued to improve. So obviously you're doing something right. How do you continue that trend?
First of all, when revenues grow, it's easier to be more efficient. So driving revenues up can help us become more efficient. And yes, we have a lot of knowledge on sourcing on ingredients. Don't forget, we had a very hard time. Every producer had a very hard time the last 2 or 3 years after COVID hit. Everything became a little bit more expensive. How do you manage that? On the other side, retailers and other clients won't allow you to add to your prices because they're trying to keep their clients as in a better positioned. So it's a constant struggle, but when you are able to grow, buy more efficient, and then invest in production capabilities to become more efficient, that helps gross margins very much. Especially because don't forget, we said that the better for you segment is always a niche production. Therefore, it's hard to automate it, and it's mostly hand crafted. But once we can scale the revenues, what we hope to do with Dare to be different than the other companies that we hope to acquire is have Avi and his team increase the revenues, introducing us to more clients, more retailers, and becoming bigger and doing longer runs, production runs will make us more efficient.
You mentioned this baked goods that you're going to start with in terms of North American expansion. But out of that, I believe that the pita is really the launch product. Why did you pick that?
Avi, do you want to take this?
Sure. Um, so when we started this exercise, I had the very same question, the exact same question. So I decided to do a deep dive, and I did a strong audit of both the Canadian market and the U.S. market, coast to coast. I looked in New York. I spent time in California. I was out there for the Expo West event in Anaheim. And what I found was that I was really impressed by the level of quality and various brands addressing different segments within frozen gluten free in the freezer. But there was one thing missing, and it was very clear. And I thought I saw it, and I continued to do that audit. And what I found, what it was indeed the fact that we were missing a pita. And uh, on various occasions, you'd find a pita brand that just looks and feels very different to the pita that the Eshbal family can produce. But it was really clear that the pipeline is full. The pipeline, from our perspective, is robust. But you want to spearhead with a very clear point of differentiation, and our differentiation, without question, is the pita. And I think that it's the right place to start, without question. It actually helped me make it kind of drew me over the finish line to get involved with the exercise.
I'll add to that if you let me. You were quite new, Avi, to the pita. I only saw it about a year ago, but I've been producing and tasting and selling this pita for a long time. Uh, as Avi stated in his slides on North American markets, we understand that North America is the biggest gluten-free market, but we also understand that baked goods is the biggest segment within this category, and that's our specialty. Baked goods is our specialty. We do want to sell also hamburger buns, baguettes, breads. Um, but in these products, there is competition. in North America, both in the US and in Canada. And if Avi goes tomorrow to a retailer and tells them, listen, I want to introduce Eshbal's bread, it will be a hard sell because maybe the buyer will tell him, listen, and I already have three brands. They are working, they're pretty good. You say you are better, perfect, but can you outsell them? Because in order to put you on the shelf, I need to take someone out. Coming with the pizza bread, which is still a baked good, it's the same segment, but they have almost nothing to offer at this in this product. Will have better chances to enter the shelves, and then once we are there and perform, then we can go back and say, listen, you already know us now. You've seen our pita, it's performing. How about now you take a chance on our bread or our rolls or our baguettes? So that will be like a stage entry. But we also had a very good validation because for the past decade, we have a client based in California. He has five restaurants and he's been ordering full containers of only pita bread produced in Israel, exported frozen, shipped to New York. From New York, it trucks all the way to California. And then he also needs to store it for a year, and we get amazing, although the price is very expensive, of course, for him, we get excellent feedback. And for 10 years, he continues buying and saying, listen, even if I want to replace your pizza, I can't find anything as good as yours. And that was like that check on saying, listen, this is the place we want to be in. And it's a good door opener to retail to afterwards introduce other baked goods.
Great. Thank you. Doesn't appear there's any further questions at this point. Gentlemen, Yuval, you've been quiet. Any closing comments from the chairman of the board?
Hi, everybody.
Just don't tell me I'm fired.
Hi, everybody. Nice to join this web seminar. Personally, I've been in the food industry, both ingredients and finished goods for the last almost 40 years. I have a vast experience in this area. I have no doubt that we're going to make it in North America. I have put my own money in it, so I know why I believe in it. North American market is very large, difficult. We don't fool ourselves, but we are trying to work slowly and smart. I invite you to join us in this challenging journey. Thank you, everybody.
Thank you, Yuval. Homer, Avi, any closing comments?
We took a very interesting task to our hands, but in our eyes, it was the obvious choice to do. Specializing in niche products and better for you products makes the Israeli market a red ocean because it's small. The Israeli market is small. The better for you segment is small. But looking across the sea and looking at the North American market, we see it, even though it's still a niche, in our eyes, it looks like a blue ocean. What we know on how to do 11.4 or maybe 14 million US dollars annually, the amounts we need to sell here is nothing for North America. So it is going to be harder, but if we succeed, or what I say, when we succeed, the numbers could be multipliers. And that's basically the enthusiasm behind what we do. And we hope people come and join us. Being public today, that they can join us on market. Maybe in the future we'll have some financing and then they can join. They'll have another attempt to join. If anyone's interested, you can leave us a message and we'll keep your information. And we see good things ahead. I say even if 10% of what we're working on will materialize, we'll be in a good place.
Thank you. With that, I think we're going to call it a wrap. I guess that's a little food pun there.
Hmm.
So we will be doing more of these, and we want the awareness of Eshbal to grow, the same as its business is growing, and especially coming to you in 26, more in North America. So thank you to all of the participants. Uh, Thank you to the Eshbal team, and we'll talk soon. Thank you.
Thank you very much, Grant, for hosting
Thank
us.
you.